Good morning, everybody. This is Dennis Wilburn with the Active Trend Trader, and welcome to How to Make Money Trading Stocks webinar that we do every Friday at 11 o'clock Pacific time. And so it's still morning time in California, but for the rest of the U.S. and around the world, regardless of what time it is, good day. Both Mike and Michael, I don't think are with us today, and that's okay. Michael sent me some just excellent slides to take a look at. To share with everybody, and we'll do that a little bit. I want to remind everybody that all the materials that we do present are for trading purposes only, and that traders should always paper trade any new method prior to the risk of their own personal capital. Here's Michael's disclaimer if he were with us. A little bit about me and my background. Seeing some very interesting things in the market. And when we do the market review, we'll cover each one of those on the charts of the individual indices. So with the Active Trend Trading folks, as you know, I am a big proponent on coaching and teaching. This week we're going to be talking about the nuts and bolts of strategy number 3, which is our wealth and income strategy. It is an option strategy. We're going to be talking about optimum action points, providing some clarification. When we get into our 12 o'clock segment, which is the final hour for premium members, I'll also be talking about some of the optimum action points. I got a great email from one of the members this week that chatted about, hey, you know, we need to stop or take more into consideration the trends when we're trading this strategy, and I agreed with him wholeheartedly. And so this week in the market, will this pause be different? We've seen a couple of different pauses over the last few months since we got into the Trump rally, and but they were basically just pullbacks to the 8 or the 20-day moving average, and then the market got back in gear and rebounded from that. So we had basically very short pullback periods. And so will it be different this time? Will we get a more significant pullback? You know, we're going to have to wait and see. Clearly the trend of the markets, especially in the S&P and the Dow, S&P and the NASDAQ is up. And so the question with the S&P, do we buy this brief pullback? And what are the clues that tell us when it is time to buy it? And same thing with the NASDAQ. Clear the Russell, and taking a look at the Russell is the weakest of the 3 tracking indexes that we follow, and which is not surprising. Russell tends during the first 3 months of the year to be a little bit weaker or to move sideways compared to the other indices. We want to keep in mind that come October time frame, if we get a good strong, good pullback in Russell, and even if we don't, but in the October / first part of November timeframe is typically when the Russell really takes off and does well. It normally outperforms the S&P during the last 2.5 to 3 months of the year. So we're going to want to be able to catch up on that this year. So I've got a couple of conflicting historical norms I'm going to cover today, and the essence of them are, from what we've seen so far during the first 2 months of 2017, that we could wind up having a stormy year that ends well. Michael sent me some information, a couple of charts I'm going to share with everybody about what it typically has meant in the past when both January and February were up months for the S&P. And let's see, yeah, Mike is not online with us yet. I don't think. Nope, don't see him. So, hey, I want to cover really quickly the percentage of stocks above the 20-day moving average on the NYSE. It has fallen down a little bit. Now, of course, we're not at any kind of action point right now, but we are watching for when this indicator, and you can find this It's $MMTW at www.barchart.com. And Mike and I basically, Mike discovered this, oh gosh, about 7 or 8 years ago. And that when this indicator gets in the very oversold condition, down here below 30, and actually the lower the better, the markets tend to, within a few days, do a turnaround and get a nice tradable rally that lasts about 20 days. And that's what we based, one of the indicators we base our early warning alert system on. For several weeks, actually the last 2 months since the beginning of the year, as you can see, we have moved just in a sideways direction and push up the new highs, but now it appears that the weakness has come back in the market, and so we may just see some sideways movement heading on. But this is where this becomes interesting for us. So if you want to track along, you can find this at that website. So here's where we sit. All the indices are up for the year, and all the indices except for the Russell is above its high from 2016. Let's take a look at some charts here. Okay, S&P. Here's what I'm talking about with regard to these short pullbacks. We came up and made a high back here on December 13th, and we drove sideways for a while, bounced higher, and did a real quick pullback. Basically a pullback that took 1, 2, 3, 4 days. Dropped below the 20, and then rebounded from there, and hasn't looked back. And I would be remiss if I didn't remind everybody, if you're a trend trader, is that once you get a break above, one of the moving averages, if you're trading off of the moving average, as long as you don't get a close back below that moving average, you can stay in the trade. And in this particular case, even though the TSI has in fact turned over, along with the momentum has also turned over, a couple of things to remember. One is whenever the true strength index and momentum is above the zero line, it's telling us that there is an uptrend going on. We do see that, we do know now that we have resistance up at the 2400 level. It got up, stuck its head above it briefly, and is pulling back. On a weekly chart, you can see that, the sellers did come in at the 2400 and pushing its way down. Where we close on today's, on this week's candle will determine whether or not we have a shooting star. We see that both from a true strength index, we are getting up into regions where normally we would get at least a pause in the price action. And we have some negative divergence on the momentum on a weekly chart. And but the question is this going to be a simple 3 or 4 day pullback back into, we've got support here at the 2370 level, at the 2360 level, and then real strong support down here at the 2300, which is the 50-day moving average. At this point, one thing to remember, as we covered during last week's training session on Wednesday night that I covered with everybody, is if it gets into support and we get a TSI tick up, that's an indication that we're potentially going to move back up. And so that's what we'd be waiting for. Yes, it doesn't get you in right square dab at the bottom, but as long as the moving average and the trend continues to move up, that's an excellent thing. We'll keep our eye on, as we've seen, this has been, the slope of this line has accelerated to the upside, so you can draw a trend line in here, just about like this, and go, okay, as long as that trend line is in place, then this this rapid rise trend will remain in effect. But then we also have a couple of other trend lines we can draw in there, like from the absolute low and and this would be a more shallow trend, and which comes closer to hitting like the 45-degree trend that you want to look at as being more sustainable. And so it could, in fact, pull all the way back to that. So you can put this on your charts, and if price action does get back around that trend line, be looking at, okay, what's my TSI telling me? Does it appear as if momentum is coming back into the entity or not? And you can do this with both the indexes, you can do it on a weekly chart, daily chart, intraday chart, and also you can transfer this concept over to your individual stocks. Speaking of which, I want to see how things are going with one of the entities we got into earlier yesterday and also today. So that's what's going on with the S&P. Again, rollover, no huge sell-off. You know, yesterday we did get a bearish harami, and it's a large bearish harami, and so that could have some significance to tell us, hey, we want to fall. As we highlighted a few weeks ago, we had an island top here where we gapped up, went sideways, and then fell back down. But you know, the effects of that island top did not last for very long. We pulled back right to the moving averages, especially the 20-day moving average, and the rebound took off from there. And so for the S&P, for the NASDAQ, we want to, you know, keep basically trading the pullbacks until the pullbacks stop working. And again, I would like to see a little bit of a tick up or a response where it bounces back, you know, it comes back, touches the moving averages, and then moves higher. And that may be what happened with the NASDAQ today, so you may want to take a look at the QQQs, but TSI not rebounding to the upside, and the daily momentum is actually going to a new low, but again, still above the zero line. Slight negative divergence on a weekly chart on the momentum. TSI moving on up to, you know, up to past highs. Over the weekend, you may want to take a look at, you know, this TSI, but expand it on a weekly chart, expand it out into, you know, when we're above the 50, and we're sitting about this height, and see what happened when, you know, how much higher did it go? In some instances, like we see back here, much higher to go. And then what was the reaction after it hit its peak? And at this point, on the weekly chart, we're not seeing really that it's hit its peak, other than to say, okay, it's into a resistance zone where it normally peaks. But that peak could happen, you know, a week from now, 2 weeks from now, and as we see, the trend of this market is, of course, still up. So that's what we got going for the NASDAQ. Let's take a little look at the comp, NASDAQ composite. Similar type of price action, down to the 8, and then appears to be rebounding. Now, I wouldn't necessarily buy this rebound right now, unless it, you know, it actually closes above it. But if you get a close back below the 8, that's going to tell us that there's a likelihood that's going to go back and retest at approximately the 20-day moving average. Take a look at the NYSE. Again, similar type thing. Looks like it's a 2-day pullback so far. Now, are we going to get a rebound? And so what I would do is lay in a, you know, at the end of the day, man, we're almost close enough to the end of the day to do that, but I would be highlighting the high of today's candlestick and just basically put an alert above that. I can put the alert up here at, and if it breaks back above that, I mean it's going above the high of the low day, which could potentially be an indication that, okay, the uptrend is running back in, is moving back up. And so I would just throw in a real quick alert on that at or above that level and put in whatever sound effect that I would like it to play so that it will alert my attention to say, okay, something has happened, go check your screen. That way I'm not just stuck at the screen all day long. Okay, and let's get back to the Russell. And the Russell, I wanted to show you a chart of all the other indices so that when we take a look at the Russell, we can see, oh, there's a significant difference there. One, it did not, it pushed up and made a new high, but that didn't last very long. It dropped back below that yesterday and now is back testing the previous breakout level at the 1388 level. And we got a close below the 8 yesterday. Now we're retesting at 20. We got a close below the 20, and if it closes below the 1388 level, then we're looking at probably a pullback into the 1380 or all the way back to the 50-day moving average. That's when you would anticipate, or those are the levels you would identify for if the uptrend is going to continue. That might be a good place for it to want to bounce. As you can see, while the other indexes bounced off the 8, the 20, the Russell has been actually bumping its nose and bumping its head or butt against the 50-day moving average. I guess it's falling. That would be its rear. It'd be, whereas if it was rising, it would be bumping its head against the ceiling. And so, well worth keeping an eye on. As you can see, momentum on a weekly basis, lower than. If we get a close today, this would be a quasi shooting star type formation. Let me go across to here, see it a little better. Quasi shooting star at the end of an uptrend, but it's just basically you had a spinning top last week, followed by a shooting star potentially this week, which is an indication that the buyers are not necessarily jumping into this index on the small caps the way it is on the other weighted indexes. So that's what I see going on with all the indices. Any questions on the indices, guys? And when I say guys, that means guys and ladies also. Okay. So I continue to talk about the seasonality. Clearly, the February, we've had both an up January and an up February, and so one of the things in the seasonality that I have noticed, I've noticed on seasonality is that oftentimes the preceding chart doesn't necessarily correspond exactly to the seasonality chart with regards to hitting its highs, but I've also found that when the past buy points or buy periods are hit time-wise, then that oftentimes, regardless of what the preceding chart looks like, when you get into that time frame, that often corresponds with buying opportunities and buying times. Bob, can you go back over the warning system? Which one of the warning systems, Bob? The alert that I just placed? And so if the post-election criteria seasonality does take effect, we may, it may have pushed out. There's still a lot of optimism out there regarding the expectations of the new administration, the positive attributes or the positive environment for business to grow, and a lot of different things. There's a big push. I mean, we're seeing a big conflict, of course, in Congress and Senate and the media, all that kind of stuff, who perhaps, well, for whatever reason. But business, it really is really clicking and going, this could be really good for small businesses and large businesses, and with the overflow effect being out to providing more jobs, less people on welfare, less government expenditures, and those kind of things, which helps grow a healthy economy. And so I'm looking for a potential buying looking for buying opportunities as we get into March, and we'll see what the charts tell us. These little pullbacks. There are instances, and that's another good thing to do over the weekend, is go back and look at past years of the S&P. Go back into the 90s. Go back into the 2000s, and there was a couple of years there where the market didn't follow per se the exact cookie cutter of seasonality, where the pullbacks were very short-lived, and then the rebound from those moving averages was very quick, and that led to some of the biggest gains in the market. So right now it is not appearing as if this dark blue line is going to work out the way we see it, but I'll keep my eye on past points where it did hit its lows, and I'll do that with the seasonality on each one of the charts. On the other things that we're looking at for seasonality, to see where the buying time periods for particular entities, either it be the commodity or the industry group, to see when in the past did it reach a buy point? Because a lot of times those coincide more so than the preceding chart. And so, yeah, Bob, if you've and this is for everybody, if you're a Thinkorswim trader, they've got some really good on the backside of Thinkorswim, they've got some really good videos that show how to place your things like alerts and all that kind of stuff. At the same time, you can also call tech support, and they will be glad to walk you through exactly how to set things up. And so they have been, that's one thing that I also like about the Thinkorswim platform. They are so good with the trader service on that. So here is the chart. This is another view of seasonality. This is the information that Michael Bishop provided before today's session that I wanted to share with people. And what does the S&P do after both a January and February, where after both January and February are higher? And here's the years where that was in fact the case, going back all the way back to 1950. And with the exception of 2 years out of those those years, the indexes were up both for the year, and here's gives the rest of the year return after being up for the first 2 months of the year. And so it's got a pretty good track record. And so taking that additional information into account could be telling us that the probability of the markets being higher at the end of this year it's definitely in the favor of being higher. Now, will that in fact work out this way this particular year? We'll see. We'll see. But because right now through the end of February, the S&P was up about almost 6%. through the end of February from the beginning of the year. And so those are all positives. One of the other things that Michael wanted me to share with everybody is that what this information doesn't take into account is the volatility that took place during the year. And he says that's where it could be very, kind of a blustery year and a very volatile market, but with a tendency to want to go to the upside. So throughout the rest of the year, there will be additional buying opportunities, and so we'll just position ourselves to wait for those. So I thought that you might find this chart interesting. Because for the year, it actually shows that goes on to, on average, has a pretty healthy return, about 19%. For the remainder of the year, the average return 12% with a median of about 11, which means it's a little bit skewed to the right. But that was 92, out of 26 years, 24 of them, were positive to the upside. I sent this chart to Mike Traeger because he's not a perma bear, but he definitely is concerned over the overvaluation of the markets and all that kind of stuff. I have not received a response from him yet, and so maybe he's researching that, and that's why he's not on the webinar today. So path of least resistance. I'm basically going to go. I'm still in the camp that I'm thinking that right now looks more like 1999 going into 2000. So I think up, although we may get an interim time period where it's moving sideways to to a pullback and then reach higher. And as I've been saying for several weeks is keep trading the pullbacks until the pullbacks stop working. That's what it basically comes down to. Yes, the market is overvalued. However, what are some of the things that could make the market not overvalued is for earnings from the different companies to pick up and business start picking up and all that kind of stuff, and profits start picking up, and that could be forced to become less overvalued. Okay, here's where we sat as of the end of February, and I'll be updating that this week. Same thing on our P&L for closed trades. So future presentation. If you are in the Bay Area and you happen to be also, if you're a member of the Bay Area Moneymakers, tomorrow at 9:00 a.m. Pacific time, my good buddy Lyle Wright will be making a presentation on overcoming fear and other roadblocks in your trading. Lyle has spent a great amount of time as basically a sports coach, a referee, learning sports psychology, and he has pulled across his learning and wisdom in the area of individual sports psychology and applied it to the art of trading. And so that's going to be going on tomorrow. No matter where you are in the country, if you want to get involved with that, you can, because it is a live webinar that goes simultaneously with that, and also recordings after. You just have to go to BayAreaMoneymakers.com and basically pay the monthly dues. You can either do a recurring due or just a single time due if you just want to see this particular presentation. Wednesday night we talk about nuts and bolts strategy 3, and we've talked about what we've done in enhancing some of the things we've been working on. Again, I didn't get very many questions last week, but if you have a technical question about the market, about technical analysis on, because I would be glad to answer those. And so please shoot me an email about, at dww@activetrendtrading.com, and I'll pull one of those out on a weekly basis and do a bonus training video and make it available to everybody. And so if you have a question in that area, please send me an email right there. I like doing those videos. It's fun. And so I want to remind everybody that the Active Trend Trading System is, our motto is clarify, simplify, so we can multiply, based on the 5 pillars of trend trading, which is identifying what to trade. We only trade top quality IBD growth stocks and top-notch ETFs. When to enter, we define; when to exit, what strategy we're going to use, and what to expect. Because in reality, you take those 5 pillars and all boils down to this: know the trend, define the area of interest where you want to take action, and then define your trigger, strategy, and targets from there. And then once we place our trade and we're filled, then we're no longer in control. And we wait for the price action to work its way in one of 2 directions. So strategy 3, which when we do focus on strategy 3, we have had more focus also this year on strategy 1, that is doing okay, and we'll be continuing. I'm working very hard on finding and trying to get us into either the leverage ETF and or good solid growth stocks, for strategy 1. Eric asked a question. Pillar number, he asked a question about pillar 4, what strategies to use. And I'll just elaborate on that just a little bit. The strategies, as I have said before, I took that chart, one of those slides out that talked about how the Active Trend Trading System is the foundation for all the 3 strategies that we use. We use either the portfolio building, which is to buy and hold until our profit targets or our stop losses are hit. The index ETFs, IBD, 50 growth stocks, or the top-notch leveraged other ETFs. And so that's one of the strategies. And when I'm sitting there watching the charts, we have the foundation position set up for strategy 3, and then it's just a matter of selling weekly premium against them. And so in my alerts that I send out, I identify what strategy I'm going to be utilizing, either strategy 1, strategy 2, and or strategy 3. And I limit it to just those strategies because I want to keep it simple and keep it also understandable for folks, and also taking into consideration the trade management after the trades are placed, because trade management after you're already in a position, then you're just working on trade management. And so that's the essence of pillar number 4. And as you can see, a lot of people have pillar 4 up here on top because they're not trading a strategy, a system. They're trading just the strategies themselves. And I've seen too many people get hurt dramatically just trading strategies. Hold on, please. Thanks for that question, Eric. So I think that basically brings us to the end of the day. I just want to, and I'll be more than willing, let's take a look at some stocks, some ETFs, and what's going on with them. 2017, at the very start of 2017, we were expecting a season of explosive growth, And who knows, the chart that Michael sent to me may be one of those indications that, hey, explosive growth for 2017 is in the cards. And you can join me on Facebook, facebook.com/active trend trading. I put on live market updates. Typically, I'll do 1 or 2 a week. Encourage you to join me on that, or at least look at the recording. I also send out Twitter announcements on upcoming events. And so then after we do this, for premium members, we will go on to the next, the final hour in the next webinar. That starts at 12 noon Pacific time. And we have a Friday webinar special for both the Active Trend Trading membership, 40% savings off that, a little bit over 60% savings on the early warning alerts. And we just refresh early warning alerts. And so, yes, Bob. Okay, why don't you give me a call on that? Because the if that button should have worked fine there on the BAM website. Now, did you go to the Bay Area Moneymakers site, that link that I sent to you? And so, okay, guys, let's look at some. Okay, well, we'll have to see, make sure that button's still working. So, what stocks would you like to take a look at? COR. What is COR? CoreSite Realty. Well, since I have this line over here, I've looked at this previously also, Eric. So what's CoreSite Realty telling us at this particular time? It's definitely telling us that, with it, well, it's, The question is it going to pull back into this support area, which is already done at the 88.46 level, and then rebound from there? The momentum looks like it is rolling out of it. This is a, there we go, it's not that. And so we do have a nice uptrend that was broken, moved sideways, and then broke back up. And so we've got this support right there. And is it going to hold there? Momentum and TSI looks like it wants to roll over. And so I'd be looking for what the candlesticks are telling me at that support level if you're looking to go long on this stock. If you're already in this stock, let's say you got in here on the move back above the 8, it may be a good time to take a little bit of profits off the table, because you'd be looking at a profit of 3, 4, 5%. And on a stock like this, that's okay. But it has in the past showed really good trending personality of respecting the 8-day moving average, and it violated and pulled back below the 20, and oftentimes that's an indication of a couple of things. One is that the consolidation is going to continue, and 2, we snap below the 20, so the strength of this part of the uptrend is over now, and it's going to go into a new phase. Same thing over here. The question I looking at this, and while this isn't totally the equivalent of our highs over here, I have to look at it. It's in this, it went up and pierced the resistance zone that's made by these 2 candles here, and now is rolling over. Has it gone into a full-blown, downtrend? Let's get rid of this. And the other thing you can do is just lay in a which is respected really well so far, just lay in that trend line, and you can wait and see how it reacts when it gets to that trend line. And will it just move sideways until it hits it, which if it did that, it would be like the 7th of March. And where's the TSI going to be? Is the TSI going to come down here, find support at the 0 line and move higher, or reverse, at some point reverse and change to a tick up to give you an indication, okay, it's less risky to go ahead and get into the trade. So that's what I'm seeing on that. I'm seeing it can go a couple of different ways. If we get a cross on the weekly chart, TSI, then I would look for a pretty good pullback. Where's a pullback I could go to? Probably the $78 level. And lay in your fibs also, Eric, your fib from here, from this swing low to that swing high, to get an idea where that magic fib box is, of where you could anticipate it rebounding. Love those fibs, yeah, so do I. Yeah, okay. What's anybody else got? A couple of trades we did last week, or we got out of last week, IDCC. And we actually got into IDCC about this 92.50 level. It was a pre-earnings trade, and we got a really nice run-up, but we knew that we wanted to, because it wasn't over 10%, we knew we wanted to be out of it, so we closed out of the second half of the trade for about a 9% gain, closed out prior to earnings, and boy, are we glad we did, because here was it reported the morning of the 23rd, and it fell like a rock. Another one that we and then we also were trading dust a couple of weeks ago and picked up some of this move here. Unfortunately, we didn't miss. We did not pick up on the rest of the move from 28, 29 up to 39. And this is one of the reasons why I really like these leveraged ETFs is if we get on the proper side of the trade, it can do very, very nicely for us. And that TSI tick up that we see going on here actually got us into a trade down here, and I want to say about 25, and then we picked it up and closed out part of that position up about the 28 level. And but both Dust and Nugget, they're either a rocket ship to the upside, or they are an airplane out of fuel falling to the ground, one of the two. And so it's a timing issue with both of them. AMD, okay, Bruce, this one looks like it is, definitely getting some gap downs. Had some, there we go. Had some very traditional negative divergence here as it was making this new high. As you can see, TSI was making a negative divergence. So was momentum. And now, I mean, this is significant selling pressure coming in, to fall. It has not taken out that low yet, but that's your next logical level of support. If we take out the 50, or it bounces off the 50, I'd be interested in watching what would be the reaction move off of that. If the reaction move was just back to the 20 or the 8-day and then a rollover, that would be telling us that, hey, get ready for some additional downside. while you're there on that, another one that has not given a lot of opportunities to get in, but it is bouncing off that 8-day moving average. Applied Materials. I mean, it's just continued to poke its head higher, poke its head higher, poke its head higher. Again, gave a good indication. It's a good indication in an uptrend where you've already moved into the uptrend. Is when you get that nice significant pullback into the 820 combo, and then you get a move up on the TSI, which would have been this day here. That is oftentimes the time to go ahead and make your move into the entity, with the stop being either below the swing low or below the day of the day when the TSI ticked up or crossed, which would have been where it bottomed, which would have been here. But you know, up and away on this one. Let's see, what's another one we've been looking at? Let's see. Take a look at my clock real quick. One of the ones that we have been evaluating and looking at is ESNT, and we'll see how this one turns out. We had some good buying coming off of the 50-day moving average, and we'll should find out soon whether this is going to be a successful bounce off the 50-day moving average or not. We picked up some additional stocks on this when it was bouncing back through the 50-day, 20-day moving average, 8-day moving average today. So we'll stand by. If the market weakens, this may fail on us. In a situation like that, if we get a close above the 8, I would use this swing low here to basically work my stop loss. So, okay, folks, I hope you have a absolutely fantastic weekend, and whatever you have planned. I know over here it's going to rain. It's been a weird winter here in Hawaii. A lot of rain, and actually, you know, colder than normal. I mean, you know, 60, you know, in the, you know, high 50s into the low 60s at nighttime, and not getting much over 71, 72 degrees during the daytime. And so I know that doesn't sound like it's very cold, but when you have no heater, it can be chilly. So, and I gave away all my winter jackets. Anyway, bless you all. Have a wonderful evening. No, it doesn't, especially when it's 30 degrees in New Jersey. Yeah, Karen, I understand. So, hey, excellent. Have a great weekend. God bless everybody.